Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're going to be discussing the NASDAQ, the QQQ specifically, and what a lot of people are looking at, specifically on the S&P 500. It actually differs from the QQQ. So I'm going to be comparing the QQQ pattern here, the head and shoulders pattern that everybody is looking at, which is making people turn bearish, specifically around the price action of Apple. And specifically what I'm seeing is a little bit different. So noticing the QQQ. So first of all, people are looking at this potential head and shoulders pattern. However, one thing I want to show you is that this cannot be a head and shoulders pattern on the QQQ. Why can't it be a head and shoulders pattern? Well, there's one thing about technical analysis. Your neckline cannot be sloping downwards. It has to be sloping upwards. And when you look at the SPY, the S&P 500, now there is a clear potential head and shoulders pattern, but often market makers like to show these patterns to make people bearish, to get them to go short, to get them to sell their longs right before they start ripping the market higher. No doubt there is a potential that this could be a head and shoulders, being the fact that the neckline is sloping upwards. However, you cannot entertain this pattern until you get a technical break of this neckline. We are nowhere close to getting that break, so therefore this pattern is not technically intact as of yet. And one thing, we all know the tech dominates the market. So when you look at the QQQ and it has a downsloping neckline, it leads me to think that since the tech heavy sectors carry the most weighting in the indices, maybe the actual S&P 500 pattern that everyone is looking at is actually invalid and wrong. So what I'm seeing actually on the QQQ is potentially an inverse head and shoulders pattern. Not many people are talking about this, but if you were to draw this left shoulder here, your head over here, now we could be forming a right shoulder. Where would your neckline be? Well, your neckline would be over here. Let's just say we rally up and break that neckline. Where does this take us to on the QQQ? Well, this would be a technical melt up. You know, we have stimulation going on. Yes, interest rates are high, which are making people bearish, but until those interest rates really start to pivot and the Fed starts to cut, let's assume that the market can go higher. The big cap tech, mega cap techs, with the amount of money and float that they have the ability to keep grinding higher even if interest rates go higher. Now, it's really only, historically speaking, the markets go lower once the bond market prices in a recession and really starts to drop those interest rates and bonds become more attractive. As of now, we're not technically there. So if this becomes an inverse head and shoulders that plays out, this means that we could actually make almost new highs in the QQQ NASDAQ, and it would ultimately lift the markets higher. You can see the high here at 408. The measured move of this pattern really takes us into a double top scenario. So I'm paying close attention to this potential melt up. A lot of people have been fearing this technical pullback in the indices in the S&P 500, but really when you look at it, the volume was very, very weak on this pullback. Yes, we broke the 50-day moving average here, which is what is making people more bearish and putting on the puts and the shorts, but the market is still in a technical uptrend on the longer term time frames. Really look at the weekly charts. I mean, we have this beautiful sine curve on the actual NASDAQ here sloping up, which leads me to think that we could actually trend higher. So before you become bearish, don't be closing your longs too much. We're kind of in this no man's land where we could go lower, but we could also go higher. I still think that we could maybe see one more final push-up, considering so many people are looking for this bearish pattern to play out on the S&P, despite it not triggering yet. And then you have the likes of Apple getting absolutely slaughtered in the last couple days, making people even more bearish. But in reality, you're still holding this beautiful consolidation zone, and this could just be a big, big pullback. And look at the volume on Apple. Heavy, heavy volume, which means that, yes, they're selling present. However, there's also buyers picking up these pieces and starting to accumulate in these ranges. So I'm not really liking the S&P 500 volume on this pullback. It doesn't really signify a top, in my opinion. And I'm paying more close attention to the QQQ because I think this could play out to be an inverse head and shoulders, which takes us higher and higher. So play close attention. There's a lot of bears out there calling for this S&P 500 head and shoulders pattern, but I am not believing it yet. And let's be clear, if we trigger this neckline to the downside, the downside measured move of this pattern, just a rough estimate, would really take you down to about this 406 level on the SPY chart. There's a whole lot of downside to play from the triggering of this neckline all the way to the downside. So don't take your shorts too early. Don't close your longs too early, because we could see a final pump in the markets. Thank you all. Please give this video a big like down below, and definitely check out our website at tradingcapital.ca for more insights